Hello, everybody. Welcome to the year end market review. It has been an absolutely fantastic year with a lot of volatility in cryptocurrencies, some great trends in equity markets, and also some commodities doing really, really well. We want to see how we did actually fare this year and look out for what good opportunities we might have in the coming year. So stay tuned. Let's start with the cryptocurrency total market cap. I'm leaving this chart on the weekly because it is by far the cleanest on the weekly time frame, and very clearly you can see on the weekly we had support, we broke it, tested it as resistance, broke it again, and we are currently testing it as resistance. So nothing much has changed for this. What I want to bring to your attention is, yes, look at the big wicks up here. The wicks are getting smaller and smaller, and now you can see that there's some wicks starting to appear at the bottom. So this is something that is interesting, but to really honestly be comfortably bullish for this market, we need to flip this 200 level as support. Once we do that, I think you have decent confirmation. It will be the first SR flip, and it might give us a good indication that this downtrend is over. Here's the quarterly chart for the altcoin market cap. I'm showing this because price action has been very clean in these quarterly levels. So what you can see is we had 1, 2, 3, 4 quarters, basically all of 2018 we had a strong correction to the big move that we had from 2015 onwards, and basically we've just bounced and found resistance right at the quarterly resistance level, and we've come back down and tested this level as support. If you're following me on Twitter, you will know that I had asked you to come back on the 1st of January and look at this level and see whether it's held or not. And it is good news, guys, that we have held this very strong quarterly level, and I do believe it is possible. Anything close to this level will be a nice place to be adjusting risk, to manage a trade for at least another bounce, and then we can see whether this is an accumulation or a distribution. But for now, the quarterly level is held, which is quite positive for odds. Here's odds against BTC, and what we want to be looking at is this weekly resistance that we rejected a couple of times off, and you can see that on every alt BTC cycle we had a strong weekly resistance that was taken out before we made a big move. And you can see that this market cycle, for now, we have failed to take out this weekly resistance, and right now what we are doing is we've broken another weekly resistance, we closed below it, and now we are retesting it as resistance. So this is not very positive right now for alts, and it seems like this weekly close, we only have about 4 hours to go, and unless we can reclaim this and close above the 31.7, this is just a bearish retest of what is a weekly support that is now turning into resistance. So for all BTC pairs, apart from individual plays, this is not the best. Here we have large cap BTC in blue and Bitcoin against the dollar in white. And what I want to bring to your attention in this chart is the correlation between alts BTC, essentially large cap BTC, and BTC USD. And you can see from the 14th of December till about the 5th or the 6th of April, I have marked out that we had positive correlation between BTC USD and large cap BTC, which means that when BTC was going up, large cap USD was going up more than BTC USD, and when they were dropping, it was the same thing. And essentially after the 5th of April, what we saw was BTC going into a strong uptrend, and we had a big sell-off in alt BTC, which lasted essentially all the way till September. The first week of September is when we did begin to kind of stabilize in BTC BTC pairs, but you can see that BTC USD was still in a strong downtrend. So all of this flatlining was essentially still the market losing a lot of dollar value. And why I'm showing this chart is what has happened since the 25th of December is that BTC USD has slowly been grinding up, but also alts against BTC have been moving up along with BTC USD. Now we've had some small spells in the middle which have been similar, but you should keep this on watch. It has been 5 days since this has been going on, and if this phenomenon continues, it is possible that we could be forming another point of value where both alts and BTC against the dollar are in demand again, and we end up seeing this pocket of correlation for the coming months. So this is something to keep a watch out for. I think it's going to be significant. For Bitcoin, we're going to be looking at a few charts, and this is first the quarterly chart on Bitcoin. And what I want to show you is that since we did top out in December, so we made an about 84% correction, and after that we have made a strong impulsive move up. We got rejected at the previous year 2018 yearly open. We got rejected right there, and we have come back down and tested the order block that we broke on the way up as support. So this is the level I was looking at. It's a very strong quarterly level. It's around 6600, and I was wanting to see at the end of the year if BTC can be holding this level, and actually if there is demand here. And the quarterly chart very well is showing, just like the alt market cap chart, that there is a good demand here for BTC. This block between 6600 and 5800 is currently holding up price quite well. For Bitcoin, we're also looking at this tweet which has some very significant statistics. Shout out to Geoff Tom. He's been doing a great job with providing statistics for the crypto and the Bitcoin market. And what we want to see here is that the yearly lows and the highs for Bitcoin are very, very significantly in either December and January. So we talk about a bullish year. The lows happened in January. This 62.5 is actually incorrect. I think it's somewhere higher than 80% of the time that when Bitcoin has a bullish year, the lows are set in January. So that's essentially what we should be looking at if these quarterly levels have to hold. That January of 2020 is when BTC prints its lows for this correction and its lows for 2020 if it has to be a bullish year. And essentially, yes, if it is bearish, is quite a good probability that January will be the time we do get a further breakdown. So I think the probably the first 2 weeks of January are going to be quite critical for Bitcoin, and this is very, very significant as a statistic, and you should have this in mind. Here are these statistics in a chart form, and you can see that we have marked out January of every year, the beginning of every year in this Bitcoin chart, and all the green circles that you can see that are marked here, they mark the bottom of that specific year, and the red circles that you can see, they mark the top of the year. So you can see that a lot of times we have had the green circles right at the beginning of the year, and here it is 2020. Let's see what this year brings, if it is going to be the top or it would be the bottom. Considering the ways the charts are looking, I think, guys, that we will bottom out in January, and it will present us a very nice opportunity. It's going to be an important month to try and catch this swing trade for a reversal on Bitcoin. Now we're looking at the Bitcoin CME futures contract dates. If you do know about this, and I think this is very important if you're in crypto, for you to know that CME, just like they offered gold futures contracts near the top of a big gold bubble. They began their futures contracts right on top of the Bitcoin bubble, and a lot of people say it is speculation, but considering the size and who is actually trading there, it is very probable that this has become a strong method of control for the CME to be able to control the Bitcoin markets, to be able to tame the Bitcoin markets, because it is no longer an asset that was only traded on spot. We have a lot of margin exchanges, and the CME, considering who trades there, is very, very significant. And this chart is actually what proves its significance, because what you can see is that each time we have contract expiry, it's about 80% of the time we are building a pivot on each one of these contract expiry dates. So this is very significant, and I mean, it's so clearly out there that they are the ones who have quite a big control over this market. And what we are looking at is the 6-month contract expiry that we had on the 27th of December. And what you can see is that twice in the 6-month expiry, we have expired right at the top of a market cycle. And there is one time where we are very close to the bottom because it is December. Like we were talking about the seasonality of Bitcoin, December or January a lot of times has been the bottom for a new cycle. So we again have a contract expiry and a new contract opening on the 30th of December, and essentially this contract is going to close on the 26th of June, which is post the halving, which is post the Bitcoin halving. So this is another part of the puzzle that we are connecting, and we do think that this contract closing where it is going to make a significant low for price to eventually move up. So like we said again, January is looking like good probability, guys. Just keep your eyes open. This is another chart that is connecting the dots for us. So this is Bitcoin on the daily time frame on Tensor charts. This is a Bitfinex chart for BTC USD, and what I want to show you is two lines over here. One is this purple line, which is the volume weighted price average, and the other one is this green line, which is the CVD or cumulative volume delta. So the volume weighted price average is exactly what it is. It is the average price weighted by volume, which can be very beneficial because it tells you where the average position of somebody who was constantly buying in this market, where that average position would be. So on the daily time frame, we are right below the daily VWAP, and the CVD you can see over here is that since the top, or basically since the May and the May top, we've had big selling on Bitfinex. The cumulative volume delta is the market buys minus the market sells, and you can see that ever since May on Bitfinex we've had a decent amount of selling pressure all the way till the 24th of November, and since then we have had a absolute shift in this. This is public information. There's been a big buyer who stepped in over here. That's not necessarily and completely something to trade with, but it is another confluence that we have for what we are looking at, which is a Bitcoin bottom close to this range, close to that quarterly order block that we were looking at, which is between 5800 and 6600. And what else we are thinking about is also the mining break-even price, which I did also speak about. It is somewhere close to 7100, including all costs, if you look at today's difficulty. So here's another confluence for what we are looking. So this is Bitcoin on the daily chart, and what I wanted to just bring to your attention was that since we did top out on the 26th of June, how many ranges Bitcoin has had that have been there to trade and that have been profitable to trade. And we've had one big range here, another range here, we had a third range on top over here, and currently we are in the fourth range of Bitcoin since we have topped out. So you can see that we had strong moves moving away from the range for a very short period of time, and about 90% of this market has been ranges. So if you haven't watched a video of how we trade ranges, I really recommend to do that. And let's zoom into the current range for Bitcoin. So here we have the current range on Bitcoin, and what you can see is that we are between this very strong quarterly support level, which is around 6600. That's the top of the order block that I just showed you, and this is in fact the entire order block all the way to around 5880. So between 6600 and 5880 is where the order block is, and right on top is the weekly resistance, and essentially where price traded before we broke back below it. So what we are looking for in this very strong range on BTC, if we are thinking that we will break down in January, is for us to trade possibly above these levels, take out these tops, maybe even this weekly level, and then come down in January and see how low we can go. It is possible that we don't hit these lower levels to make something as violent as this, but if we do and we break back into this range, this will again, just like we did over here, this is what we caught live on Twitter, this would be a great place to catch along for Bitcoin if we are able to do something like this. Otherwise, if we just build this weekly stop run and we find support somewhere along the middle of this range again, you can be staying in tune with what we are planning to do in January and where we end up catching these yearly lows. And a safe place where I think you should be looking for BTC to be catching along is once we reclaim this weekly resistance level, because on a higher time frame this will be the first reclaim that BTC will do, and it will be an early sign of reversal for Bitcoin. So for the next 2 or 3 weeks, what we would really like is for price to take out the top of this range, get all the liquidity here, create another big scare, and head into this order block, test this order block for the third time, and essentially take everybody out and get us back in to build the lows of the year. Here's dark gold on the yearly, and what we can see over here is that we have somewhat of a similarity, like a fractal similarity of this slow grind up, and then we had a couple of years of sideways before we resumed trend. And though it is a bit more wiki, we do have a similar slow grind up and a couple of years of sideways. And what essentially would be most ideal is a possible sell-off at the beginning of the year, and then a resumption of the trend all the way to these levels up here. So this is a very macro picture, and we're looking at the yearly chart, but essentially we're looking at over the next 4-5 years for price to come and find resistance at this 25-26 level. That's quite a decent move that's possible. Let's go down to the daily time frame. I'm gonna put back on the levels that we were looking at. So we've had a strong rejection at this wedge, and the price broke back above and now is back down below. As you know, gold had quite a good week, and I think because we are seeing decent strength in risk off assets like gold, we should start to become careful with our long positions in the indices, because we've had a couple of strong rejections, and this weekly resistance of 20 and the edge of 19, this is basically a yearly resistance, so it's a very high time frame strong resistance, and you can see it's doing its job pretty well. We were looking at this resistance level since the longest time. I still did think that we would be testing it, and even if we were to fail, or we reclaim it and take a level higher, but since we are failing it, I would suggest that to be careful and manage your long positions with tighter stop losses, so that if we do start getting some kind of a range, we are able to change our strategy accordingly. So here's Nasdaq. This is the yearly chart for Nasdaq, and why I just wanted to show you this chart is because if you do trade crypto and you are on crypto Twitter, you see it a lot. You see it so much. People calling tops on trends. You can see since 2009 we've had a very strong trend in this market, and 2018 was a sideways consolidation phase, which we have broken out of and finished very strongly. So fading this just does not seem like a smart idea. I see a lot of people trying to short it, or a lot of people trying to long stocks which are basically in a downtrend themselves. So what I would suggest is for you to catch retraces on this. I mean, if you look at this is a yearly chart. So in this market, dips are for buying, and I think the first quarter is going to bring a good sell off. And if that happens, if you're not positioned in this market, or if you're looking to get in for even the long term or for an investment, you should really be looking for pullbacks in this market, because this is a bull trend, guys, and it is a strong trend. And this is what traders or investors do. We ride trends. So do look into this market and catch the dips on the first quarter. Hopefully we do get that a decent sell off, since we've had such a steep move, and catch the dips, guys. Here's the yearly chart on gold, and you can see from about 1300 we have hit 1510. Gold has had quite a positive year, and the strength at the end of the year for gold has us thinking that the first quarter we can get that sell off that we're looking for in the equities, so that there could be strength in gold. This level could hold, but that sell off in equities could be something that is worth waiting and watching. And I'm gonna go to the 4-hour chart, because that's what we were looking at before. And last week our play was we were looking at this key level. 1480 was this key level where we had made this top run, and the plan was either for price to break below this weekly resistance, and if we did, this was the short opportunity to the top of this channel and the daily support level. And I did talk about the fact that if we do close above, start finding support above this 1480 level, you can take a few longs. Congrats if you did take these with us. These are 3 trades. The third one, we were basically aiming for these highs, so we have attained the target for these trades. And since it's the end of the year, we're going to wait for the chart to print out something. But essentially, if we do look at what is possible next for gold, just draw out some fibs here. So this has been quite a strong move, and if we can find support somewhere around the 1490 region or come back all the way down like we have been ranging on gold before, 1480, this has been quite a strong level. So let's see if price can range within this within these daily levels and give us some more plays. For now, this trade is taken. We've taken profits off the table, and we would only be re-entering longs on gold if we can reclaim this weekly level and trade it up to the 1530 level. Otherwise, we're looking for a retrace, and let's see how price reacts once we get to 1490. So that'll be all for the yearly review, guys. Hope you enjoyed it. What we are looking for is to buy the dips on Bitcoin. Hopefully January will give us a good move for that. The first quarter of 2019, we are looking to buy dips on equities and indices, and our go trade for this year is done, and we're going to be looking for possibly either a range play on metals. But just stay tuned, guys. A lot of exciting things coming for 2020, a lot of great educational content for you, and let's go and make some money in the markets. Cheers. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers.